What's going on, everybody? In this video, we're going to talk about one of the most consistently profitable short setups I have ever traded. We talk about this almost every single day on our live streams. It is the rollover top short pattern. So what you're going to need for this pattern is basically just a VWAP, but if you guys have access to an order flow platform, we are going to talk about how you can use the delta, the cumulative delta, and just the order flow with the delta profile and volume profile here in a little bit. So starting off with the exact pattern with the candlesticks, we like to watch this pattern on the 1 minute chart. So typically what we're going to look for is right out of the gate starting at 9:30 on the New York Open. We want to see a strong impulse to the upside. So with this day here, this is Monday, June 2nd, 2025. You guys want to go back and look at it on your charts. We started at 9:30, instantly started pushing up. So that was the first signal this rollover top was starting. The second signal that we look for is a little bit of a high, a little bit of a stall out after that impulse. So we have the impulse, we have a little bit of chop. Then the next thing that we look for is a weak high. We want to see that high that first started to stall, that price first started to stall on that high. We want to see that get taken out just barely, not by much. We don't want to see a strong impulse out of that high. We just want to see a small break. And then after that small break, we want to see it come back almost immediately. So we have that small break, we call that a weak high. It comes back, and then this is the final thing we look for. We want to see a lower high. So after we have that weak high, we want to see that lower high. So recap, strong impulse, a little bit of a high, try to break out, fail the breakout, and then put in a lower high. If you guys are familiar with the head and shoulders pattern, it is very close to a head and shoulders. Not exactly the same, but very similar. Okay, so after that impulse, puts in a weak high, puts in a little chop, then puts in a weak high, then puts in a lower high. This is where we look to take that short. So that short is going to be a short setup in this little cluster right here. Stop loss is going to be above the high. Typically, we want this to be, I would say, 5 to 7 points tops. So if this lower high is way lower and you can't put your stop above that high of day for about 5 to 7 points, you're probably too late. Okay, so in this case here, let's say the perfect entry was 14. That prior high was 18. So we can easily put our stop loss 5 to 7 points away. Let's say we had a little bit of a later entry. And let's say we got in around 12. That high is around 18. So that would still fit our 7-point stop loss. Okay, so that's our entry. The entry is the lower high. The stop loss is above the high a day. So what is our target or targets, right? The main target is always the VWAPs, whether that be the daily VWAP that starts at 9:30 or the session VWAP that starts at 6 p.m. Eastern the prior day. Now, typically, I would target both of them. In this exact example, we cannot target the daily VWAP, which is the white line on my chart, because it's too close to our entry. So our stop loss would be 5 to 7 points away. So in order for us to want to target VWAP, it needs to be 5 to 7 points away, at least a 1-to-1. Typically, you want it to be even higher than that, maybe like a 1.5. So if I'm risking 5, I want VWAP to be like 7 points away. Okay, so the daily VWAP is too close in this example. So the other target would be the session VWAP, which is the yellow line in my screenshot here. And the other target would be the low that started the impulse. So in this case, the low that started the impulse and VWAP are the same exact level. So we would have to take another low if we want a farther out target. Okay, so let's recap. The entry is the lower high after the weak high. So the buyers failed to break out. They pulled back. And that final confirmation is that rollover. You're rolling over in momentum, putting in that lower high. Your stop loss is above the high of day, and your target is the daily VWAP, the session VWAP, and the low that started the impulse. If the low that started the impulse is basically the same level as VWAP, then we can look for prior lows. Let's take a look at the order flow and see how we could trade this using delta. So here's the 1 minute on ES and NASDAQ showing that rollover top. So we have that impulse out of the gate. We have that little bit of chop telling us that the sellers are interested. We have one more attempt by the buyers that try to take out that high, which they normally do. But after they take out that high, they become very weak very quickly. That puts in a weak high, instantly pulls back. Then we look for that lower high. There's the lower high, and you always want to double check on your delta that that lower high is still losing delta. We want the delta to be going down from that prior high. A bonus is if you have a bear div. So if this weak high put in lower delta than the prior high. So you put in a higher high on price, but then you put in a lower high on delta. That would be a bonus for this trade, just making it a little bit better. Okay, and then we have that sell-off. And you can see delta is following price all the way down. Those market orders are very bearish all the way down with that 1 minute push. Let's take a look at the 30-minute footprint and how we could have used this in our trading. This is a very common pattern that you are going to see during a rollover top. You are going to see a strong node that is typically where that lower high is and where that prior high is, not the weak high, but where the first little struggle happened, where the sellers showed you that they were interested. You'll typically start to build up a volume node where those sellers are interested. And when they try to break out above that node, that is where those buyers basically get trapped. So typically, another bonus for this trade would be if we have an absorption up here. So if we have a lot of bullish delta on this high, but it's not able to stay above that absorption, above that delta cluster. If they were not able to get profit after that bullish delta came in, that would mean that a lot of buyers are trapped on that high. Now, in this example, we don't get that bonus. We didn't have a major absorption on that high. But what we did have is a pretty strong fall off in volume. So on the right side, this is the volume profile of that candle. We can see that there is a strong node where that lower high is being established. So when you go to push, sorry, not the lower high, the first high is being established. So when we go to push away from that node, the volume falls off rapidly. We want to see a lack of buyer volume up here. And if there is significant buyer volume, like I just covered, we want to see it being absorbed. Okay, so we either want to see a strong fall off in volume, or if that volume is a lot higher, a lot stronger, we do not want to see them getting any profit. And we still want to see them come back to that node very quickly. I would say within 5 minutes. We do not want to see that weak high holding for longer than a couple of minutes, anywhere from 2 to 5 minutes. Okay, so then you pull back to that node, and when you put in that lower high, that's usually where this node is. So what we want to see, and this is hard to show you in hindsight, but what we want to see during the trade is when price is trading back on that node, we need to watch the time and sales. And let's say, for example, this node is 59.13. The tape needs to be showing a lot of sell pressure below 13. We want to see like 12. We want to see 11. And any time that it tries to push back into that 13 or 14 or even 15, we want to see it selling back down immediately. We do not want to see that time and sales consistently green above the POC of that node. Okay. So if they push above the POC of that node, we need to see it turn red immediately. If it pushes below or starts to sell below, we want to see them holding that red on the tape. We want to see those orders flowing in. We do not want to see a lot of buy pressure below that node. If there is a lot of buy pressure below that node, then typically it's not going to be a rollover top. It's going to turn into a vertical distribution, meaning that they're going to keep slowly grinding up, which we're not going to talk about in this video. But okay, so once they have lost that node, once we see that sell pressure being strong around that 13, it could possibly be 14, 15, just in that general area of that node, that's when we want to take that entry. Okay, so we take that entry around the node, we put our stop above that high, and then we just ride it down, looking for VWAP and looking for those prior lows. Okay? This is a very common pattern. It happens time and time again. I'm not going to say it happens every single day, but it happens a few times a week. And when it does happen, it has an extremely high strike rate. It is one of our favorite, if not our favorite, short setup patterns right now. It is extremely consistent. It gives you a very easy level for your stop loss, and it gives you a very easy way to kind of trail it out. You can trail it based on the volume nodes. You can trail it based on the order flow. You can trail it based on the EMAs if it's holding below the 80 EMA as it's pushing down. Here's a great example with this setup. You held below the 80 EMA the entire time. So when you started to break back above that 80 EMA over here, that's when you would have closed that trade. And that would have been a very healthy profit. But all right, guys, that is it for this pattern. If you liked the video, hit that like button. Be sure to subscribe, and I'll see you guys in the next one. Peace.